Okay, apologies about that. I'm just flicking timeframes. Sometimes when we're on the on GoToWebinar, because it's kind of caused some kind of minor conflict with my NinjaTrader, so some of the indicators disappear, which is not what I want at the moment. Right, multiple timeframes and what they tell us, and particularly using the zones, the areas that are created by the volume point of control. The volume point of control is this yellow dashed line that that you will see on the chart, and it is it marks the area on the chart where there was what we call general price agreement. You can call it fair value. You know, as you can see here, the price moved away, then it came back, and it also denotes congestion phases. You will find, you know, there is no firm direction for you know, the chart that you are looking at, and there's no firm direction for all sorts of reasons. Maybe it's waiting for a piece of news, maybe it's the wrong time of the trading day for this particular market or instruments, because, you know, new traders tend to think the markets are in a perpetual motion, but then they don't, you know, they don't move at a constant rate. You know, there will be momentum, there'll be periods of quiet, long periods of quiet, as I said, for all sorts of reasons. You know, there may not be as many traders in that particular session. So, you know, having something such as the volume point of control, immediately it gives the structure to the chart, and you know you're in a congestion phase. Now, obviously, the slower the time frame, then if you go up to the 60-minute for the pound Aussie. Now, at the moment, what's interesting about this piece of price action is not what I was going to cover, but it's significant, and it's the reason why you should look at slower time frames as well as faster time frames, along with the time frame that you like to use perhaps to take your trade from. And that is, well, is the price approaching the volume point of control on a slower time frame? And clearly this is, because not only is it then moving into an area where there is a large amount of congestion, it also provides a very, very strong support platform. And also, if it is going to go through, it is going to take a lot of volume, but we'll save that for another day. I just want to go back to the 10-minute and the faster time frames, and I've also got the Renko up at the moment because I want to have a look at this indicator. This is, as I said, this is the point of control, the volume point of control, and you can see here this histogram, this hatch, this what do you describe it, David? The I can't think of the word.
I'll just call it the histogram.
Yeah, the histogram here. You can see it's actually moving, and it's constantly recalculating. But you know, as the price moves forward, it's looking back and it's making these areas more dense or less dense. And we call these more dense areas high volume nodes, and we call them, when they're very narrow, as we see here, we call them low volume nodes. And this is quite a low volume node here as well. And again, they have a specific significance. But what I really want to look at is the outer regions of the volume point of control, which is either where the price may be trading at the moment, as we can see here, or as we can see on the 60-minute chart, it's not at the outermost regions, because when it gets to the outermost regions, and the only way I can describe this at this point up here at 76.70 and where we are at the moment, it is where we are looking for a potential reversal. Because it has, if you like, it's almost like, it works a bit like the CSI. It's reached, again, based on this concept of mean reversion, which is hugely important in the forex market. So we've reached a point with this pair, and obviously this is, you know, this is dynamic. It's not a fixed point. But if you want to see whether it actually corresponds with any other significant price-based point, well, you have the accumulation and distribution indicator, but we also have what we call our Camarilla indicator. And at the moment, it isn't. It's not near anything of significance. Certainly on the 10-minute. I'll just have a quick look on 60. I just want to clarify, where I am in terms of price action based support and resistance. I know what I am in terms of volume based support and resistance, and I also want to see, is it, are we reaching these significant levels based on the Camarilla? So we're not. So it's a case of, does this want to move further, or are we looking at some kind of reversal? And what's interesting about this price action here is the number of times it's clearly trying to find a base at 76.0. We can see the buying coming in at the bottom of the candle as it's being formed at the moment. But I just want to go back to what it was at about 6:30 this morning. The original move here, the original move lower, was out of my time zone, out of the time that I would be at my screen. Is clearly we've had this break lower from the volume point of control. Not a smooth run lower, fairly sort of, took its time to get to. Now at the time, this would have been the outer, this would have been the last line, if you like, from the VPOC, and it would, it gets to this point. So when it's at the last line here, and I'm on the 10-minute chart, as I said, it's a chart that I use a lot for analysis, and I actually like to use it myself. I think, okay, that looks like it looks like it's based. We've got candles with wicks to the bottom. I've actually got a pivot, so maybe it's looking for a reversal. But at the time, forget what's happened here. Look at, focus on what we're looking at now. This is where you move to a faster time frame. I've actually got the 4 minutes. So if you look at the 4 minute, and the reason I'm using NinjaTrader, it's easy to look at the timestamps. So you look at the 4 minute and you go back to 6:30. Now, unfortunately, it's actually moved, but I can assure you this was also at the outer limits. It was down here. Now, as a trader who looks at the 10-minute chart, obviously I've got to wait for, for any potential reversal to develop. This is 10, 20, 30, this is almost 40 minutes. But by looking at the 10-minute, maybe I'm a 4-minute chart trader, and this is the time frame that I use just as a kind of benchmark to see what is happening. But I'm actually like to take my trades on the 4 minute. So I look at the 4 minute, and what do I see here? Well, I actually see a 2-bar reversal. And as I said, because this is a dynamic indicator, these zones are changing all the time. Perhaps I should have taken a screenshot, my fault. This would have been the outermost limit for this particular pair. And I look at the candles, I look at the volume, I look at what's also happening on my benchmark chart, and I think, do you know what? Maybe that is the reversal that I'm looking for. I also, as I said, we bring in the CSI here. If I just bring this up here, hopefully it'll be here. And at 6:30, what we had was, it wasn't so much a drive higher from the pound. It was really more a very sharp sell-off in the Australian dollar. So that is a little bit of price action that was captured, as I said, off this 4-minute chart. Now, where did it actually, it's actually stopped at 76.40. So I go back to my time frame here, and 76.40, let's have a look, where are we? 76.40, 76.40 is actually, this is where the volume point of control was at the on the 10-minute chart. So you look at these levels, they change dynamically. They're always, they're in a constant state of flux as they build, as volume builds, as they change. But they are, you can use them as a starting point. Now we're still kind of in the backwash, if you like, of the London Open, where I often find, certainly on the 10-minute chart, sometimes you really do have to wait maybe 45, sometimes even an hour for things to kind of settle down. And if we look at what happened at the London Open, this was the move lower, move higher. We had the 2-bar reversal, and then down we came. And if we look at 8 o'clock, we had a typical sort of trap. We had a sharp move lower, then we had a load of buy, looked like a lot of buying coming in. This is where possibly a lot of traders would have jumped in, but in fact it was a trap. The price simply moved lower again. This was the lowest region of the, as I said, this at the time, the outermost region of the volume point of control. Buying coming in here. Now, what I want to make a point is these look like quite you know, they can be quite wide range candles. If you are a trader who is on the 1 minute or even the second chart, or even the, as I said, the 4 minute chart, would this move, is that enough for you? Well, only you can answer that. But all I'm saying is, because it occurred at one of these, you know, pivotal points on the chart, you may, by using, as I said, multiple time frames, that may have been sufficient for you. So if we look back at 76 there, this was the point. This is the hammer candle, decent amount of volume in. It's only a couple of candles, but that may be enough for you. And this is something else that you have to come to, you know, only you can make that decision as to whether there's enough in the move that you see from these significant levels. I'll be with you in a second. I'm not finished anyway. You know, that's very much, as I said, only you can make that decision. In fact, what this is happening, we seem to be having a continuation of the trend. And on that point, that is another, that's looking at another issue, and that is where you join this particular move. And it's underway. The temptation is to simply sort of, you know, think, oh great, it's moving, you know, I'm going to jump in. No, really have to wait for a firm pause point. We looked as though it had one here, but it carried on lower, and we have to wait for the buying to come in from the deep wicks of the candles. We have to wait a little bit of congestion as well. But if we look at the Camarilla, where are we? Let's go to the 10 minute, which I think is much more significant. You know, it looks like what this price wants to do. Where is it likely to stop? In terms of you know, a potential reversal? Well, the fourth level is certainly very important. Maybe it gets there. If I've missed it, I've missed it. You know, you just have to, you know, you just have to wait, be patient if the reversal is going to happen. Now, if it doesn't and it congests, then you look for those congestion phases potentially to rejoin the trend. And what the Renko is telling us is it's holding, as I said, that has stayed relentlessly red, but we can see here the move lower. It's been punctuated with these constant attempts to rise, and the attempts to rise are reflected, as I said, on the outermost regions of the volume point of control. And at some point, it will reverse, but it doesn't look like it wants to reverse at the moment. And looking again here on the 10 minute, this is the pound. The pound is certainly oversold, and possibly in some of the other pairs, maybe it's, you know, there may be a buying opportunity in the pound, but this looks like it's being driven more. Now we've got it with buying of the Australian dollar. So we want that. If that's going to be driven higher, we will see what happens.